Good morning, Paul Georgie from Allendale. It's July 12th, 2010. Well, the outside markets this morning, dollar up 32, crude down just slightly. Stock market's expected to retrace a little bit here, down about 20 right now in the Dow index. The dollar, it went down, touched the 100-day moving average, bounced off of that, so we're seeing some support there. And we've got a lot of commodities that are floating around this 100-day moving average, and if we can cross it one way or the other, it could give us some direction of where we're going in this market here rather quickly. The corn market is affected by weather here today, and it's called steady here this morning. The weather forecasts haven't really changed a whole lot. We've got some forecasts that have got some ridging development in it where it could be dry in certain areas, but overall I think the weather here for the next several days looks pretty advantageous to corn and crop growth, and that could keep some pressure on this market. However, the money flow is going to be the key issue. How many dollars do we have coming in from funds, and what kind of positions are they going to put on, and how large of positions? So this is going to be the supportive factor for the market. The U.S. or the CFTC released the commitment of traders on Friday. It showed that the large non-commercials went from a negative 39,000 or short the market 39,000 contracts to being long the market 17,000 contracts in that week, and that's what we're seeing. And if as they continue to swing, it looks like any retracements here should be well supported just from money flow and outside influences here from investors. The Chinese, not much news out of there. They did report, however, that their corn exports for the month of June coming out of China was 69% less than the same period last year, which that's a reason why we're seeing this strength here in the U.S. corn markets. Deliveries also, corn deliveries were 864 contracts. That still is a lot of contracts that are rolling around. They went to the street basically, no strong holders of or buyers of that of those delivered contracts, so you'd expect that they're going to come out here again tomorrow. In the soybeans, call there is 1 to 3 lower. The Chinese soybean imports were up 32% the first half of this year. That's continuing to provide good support here to the nearby soybean contracts and also the new crop. As we see on a weekly basis when you get the export sales, China's out there buying new crop beans as well. Weather conditions again for soybeans, it's kind of ho-hum at this point, simply because the weather is good. We still have got some time where the soybean plant is most critical, and that's usually in the month of August. So if it would turn dry in August, that could have a very large impact on soybean production, and that's why the trade is so nervous about these long-term forecasts and where and how much rain we're going to get during that period of time, because that can have a huge impact on soybean production. Wheat, trade is still talking about the negative report from Friday that the USDA increased the total wheat production. That continues to weigh on the market, but early indications here this morning, we're calling the market pretty much steady, maybe even a little firmer out in those deferred contracts. There was some news stories out this morning about the Australian wheat crop. They are becoming concerned about the locust plague in that area, and that's not affecting crops right now, but their association that monitors this is starting to put out some warnings that could have an impact over the next several months. In the cattle trade, we had cutout values down slightly on Friday, 24 lower in choice, 37 lower in the select. The cash market traded higher last week around that $90 area, $91 area. We expect that we're going to probably in that steady range again this week. Technically on the charts, we needed to close above $91 on Friday in the August contract. We went up there, tested that area, and then backed off. Right now we've got support at $90, resistance at 91. If we can break out of that range that we're in, either way will give us some momentum in that direction, at least for a dollar or so we would expect. In the pork complex, cutout values there were up 69 cents, continue to work higher. The $80 area in the August hog contract has been support here last week, continues to be support this week, but it looks like we could test that area today, and I would assume with the consolidation that we've seen in that market, if we break through to the downside below that $80 area, I would expect that we're going to test some stops below there, and if we close below there, it kind of opens the door, and our next downside target is around the 78.50 area, with the August contract resistance at 81.25, last week's high. If we can punch through that, it will give us some more strength and probably see some more technical buying kick in. So a lot of things going this week. We don't have many USDA reports to contend with. We've got the normal, the export sales report on Thursday, but other than that, not a lot of USDA influences as far as report go in any commodity here this week. So keep in touch, though, with Allendale. We'll try to help you, guide you through this week, and give you some trading ideas. We'll be happy to answer any questions you might have. Give us a call at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow.